Okay, last trading day of January 2016. I've gotten so much positive feedback on these market updates concerning these support and resistance levels. I thought I'd give you a quick glimpse of what happened this week. And then I also want to talk about what happened with the Bank of Japan today and why the market reacted the way it did today. So if you recall from our other videos, remember we have a support level and a resistance level. If the markets are going down, they can either bounce off the support level or they can crash through. Same on the resistance level. The markets can be going up and they can bounce off or they can break through on the upside. 1880 is the big number we've been focusing on, and 1990 is resistance level we've been focusing on. So let's set our bearings. This is the S&P 500 this week. So here's 1880 level right here. So this line going right across here. So you can see at the end of Monday, right, we closed right below it at 1877. Tuesday was really kind of uneventful. We kind of bounced around up here. Wednesday was the day that I really wanted to show you because out of the gate, markets did very well. And then this is when we heard from the Fed, right? And we heard this mixed signal and people got very nervous. And this is what's really important. This is why I like focusing on these support levels. Everybody got scared and things panicked and people sold off. And where did it end the day? Where's the support level? And we're at the end of the day at 1882. You can see it right there, 1882. So it sits right on top of that support level. We bounce around yesterday, Thursday. Then we get the news, Bank of Japan's going into negative interest rates. We get a bad gross domestic product number, which means further evidence that things are slowing down. And so people interpret that positively, amazingly enough, that no way the Fed's going to raise interest rates if things are continuing to slow down and we're looking at the recession and so forth. So markets rage up, right? Crack cocaine's being fed to the drug dealer again. Markets raise up, and where do they go to? They hit right into that 1920 support level. Let's look at it close up. Here we go. You can see it's 1920 support level. And look, we move sideways. So it runs up and we move sideways until there's enough energy to blow through it, and then we end up going up to 1940. This is what I'm talking about. This just proves this 1880 support level and this 1920 support level. So now, next stop is the resistance level, the 1990. Will we get to this resistance level and what will happen, right? So what I said in other videos, if we go here and ricochet off in a matter of a day or two and bounce straight down with a high fractal dimension, it's look out below. If we're able to break through, then that's good news, and that brings in a further upside. So together, we'll keep an eye on this. So let's talk about what happened with the Bank of Japan, because this is important because Sweden's already done this, and there's some really important things to focus on. So we have a bunch of institutional banks. These institutional banks get their money from the Central Reserve Bank. So Bank of Japan is the equivalent of our Federal Reserve. As an institutional bank, they have to hold X amount of reserves in their bank. Okay. Now, in the Bank of Japan, the reserving that they're getting, the rate that they get from the Bank of Japan is 0.1%. That's what they get. The announcement today is that moving forward, guess what? It's a negative 0.1 for everything above the reserves. So this is the way this works. Banks have to have reserving money, and then they have all this other money. This is what they're supposed to lend to people. So for a mortgage, they're supposed to lend to people for a mortgage of 3 or 4%. So they got it from the Bank of Japan at 0.1, and they lend it to us at 3, and so they make 300 basis points, 3%. That's how they made a profit. Or they do a car loan of 6 to 8%, right? So they got the money from the central bank at 0.1, they lend it at 6. So this is how banks make money. What the Bank of Japan is saying, okay, this is where the money comes from for this type of activity. Not the reserves, for this type of activity. Reserves for capital protection. This money that is here, that came from the bank, from the Central Reserve, this is supposed to go out to the people. Well, guess what? It's not happening fast enough. The banks are not free enough with the money in order to get the money into the system in order to create what? 2% inflation. That's what everybody's looking for. They're all looking for this 2% inflation, right? Well, the banks aren't doing it. They're sitting on it. So what the Bank of Japan and what the Bank of Sweden has said, well, guess what? We're not going to let you do it anymore. All this money you hold in here, guess what? Now you have to pay us 0.1. That's what a negative interest rate is, and that's how that works. In the Federal Reserve case, just to bring it home to us so we understand really what has went on in December, right? The banks have their reserve, and this has been for a long time 0%. So when they lent the money to us for a mortgage of 3, they borrowed it from the Federal Reserve at 0 and they made 3%. Now the Fed moved it up to 0.25, right? So this money that's supposed to be lent out here and now lent out here for the same mortgage of 3%, right? Now instead of making 3%, they're making 2.75. Well, that's still a big profit. So you can see this really wasn't that big of a move as far as the balance sheet of a bank. It was more a perception. But this desperation, folks, now the market reacted well today. And it bugs me. It bugs the tar out of me that people get excited that we have a bad GDP number. We had the Bank of Japan saying, you're not moving the money. It's not getting in the system. You're not doing anything productive. We're going to start charging you for it. And other people in Europe are going to follow this. And yet our market goes up. So this is what I spoke about in the last video where I finished this book, and the alert, the January alert that I'm writing this weekend, I'm going to talk about this. So please go and when that's sent to you, please read that, because I'm going to be talking about what this means and what is on the horizon, not only for the Federal Reserve, but for Europe and other places. So as always, go to the brinkmanacademy.com and subscribe to watch the other videos. Share this with your friends if you'd like. Appreciate it. Have a good weekend. Thanks much.